Good morning, ladies and gentlemen. Today we would like to discuss about what shift in hotel property dynamics and investment behavior. As you are aware, the hospitality sector has experienced significant changes over the past few years. We have seen from the shift in travel patterns and also guest expectations to evolving investment strategies and also capital allocation in hotel properties. During this 40-minute session, we will explore how hotel investors and operators and developers are responding to these changes. Okay, without further discussion, I would like to introduce our panelists. Okay, shall we start from Norbert Vas, Managing Director of Optimum Hospitality. Good morning. Who brings an owner and asset management perspective with hands-on experience in hotel investment and performance optimization. The second one is Tjen, Director of Business Development for Indonesia and Malaysia at Radisson Hotel Group, representing a global operator's view on brand growth, market selection, and partnerships in Southeast Asia. The third panelist is Ilyas Najim, Managing Director of MMI-Advisors, offering an advisory perspective across hospitality, strategy, feasibility, and development decisions. The last but not least, Philip Barnes, Country General Manager of the Ascott Limited Indonesia, who oversees one of the region's leading service residence and hospitality platforms in Indonesian market. Okay, I think for the interest of time, I will have 3 questions and then we throw to the audience to have the other questions. Okay, I would like to start with a broad question to frame the discussion and then we go deeper from that. It sounds good? Okay. I would like to start the question with Norbert. Okay, question number 1. How do you see the hotel market in Indonesia shifting in recent years, and what does it mean for the industry?
That's a very broad question. Shift in hotel dynamics, I've prepared myself a little cheat sheet, which later also is available as a handout if you want to. We have identified 18 different shifts happening right now. In the interest of time, I will maybe only focus on 2 or 3 right now and then hand over to my colleagues here. One thing that we see is that ESG is gaining importance, also when it comes to hotel valuation and access to capital and lending. If you have a proper sustainability program, your asset will get a loan and will be improving in value and be easier to sell. We see a shift into secondary and tertiary markets where investors understand now that the real money is in the domestic market and in secondary cities where development costs are also far less. And another shift is a little bit, it sounds like I'm self-promoting what Optimum does, but the reality is that we are seeing a shift in management models where owners want to have more control over their asset and are more likely to hire a local asset management company like Nova or Optimum to help them, and then negotiate and drive a brand licensing agreement and a franchise agreement, which gives the owner far more control over his assets and has proven to outperform the traditional model and improve GOP levels significantly.
Okay, so I think we'll throw to Steve to hear his perspective on the same question.
Good morning, everyone, first of all. It's good to see so many familiar faces here. I'll keep it at 3 shifts, not 18, to make it shorter. I think a few things that we notice across Indonesia and the performance. One thing, if you look at where the market is today and the tier 1 cities and the major MICE-driven hotels, and it kind of is the consensus, MICE is under pressure at the moment. Especially since last year, I think everybody have seen the impact of what less government spending on hotels means and feels like. So you see a shift in that regard where I see most of the new hotels coming on are a little bit less MICE heavy for that reason. And that, I think, translates to the same thing of less conventional hotel, more lifestyle, more perhaps F&B, working with a third-party operator. So a new, less MICE-heavy type of hotels in the pipeline. And what's also interesting to me is, if you're looking historically, Indonesia, a very mid-scale, economy-driven hotel industry, where most of the shares are in the mid-scale. But you gradually see a shift towards more upscale and even luxury segments that are growing bigger in Indonesia, not just in Bali, but all across the archipelago. So that's an interesting shift, and we see this shift continuing for pre-COVID and post-COVID. And eventually, after this decade, I think there is even a possibility it will outpace the mid-scale and economy segment in terms of growth, in terms of new projects. So I think these are a few shifts that I think interesting to notice.
Thank you, Steve. So what do you think, Ilyas?
Interesting, actually. Shifts like number one, you said, Norbert, is it's a bit in contradiction with what have been said earlier about does a sustainability certification brings value to an asset or no. You're saying yes, previously it was said no. I agree with you, Norbert. I come from investment banking industry, so basically sustainability is a key factor to create a premium on the exit mainly. Yeah. It helps support the fact that the hotel is well maintained, have a better technology, etc. However, I understand as well that sometimes it's an overcost, and the challenge is to try to maintain this operations running efficiently. The second shift that you mentioned also, Steve, is a luxury segment. We do believe that luxury upper upscale segments will outperform all the other segments of hospitality within the next 5-10 years. And I will add maybe 2 other shifts in terms of consumer behavior. Wellness, longevity is the future. People are changing their mindset. Why? Because education starts to have an impact globally. The economies are already globalized, uniformized in a certain way. So today people want to feel experiences. So experiential tourism, experiential, just experiences, new experiences. And another shift that we see also happening is more grounding, more connection to nature. Agri-tourism, we believe, is going to be the segment of the next 5 to 10 years. And the last one, if I may, and this is more an acceleration that will happen again over the next 5 to 10 years, is the integration of tech within the SOPs of operators, not at the level that we experienced so far, but a way deeper level, way higher level, where we believe that operators will not be operators anymore, they will be tech companies. And that's the one that we expect to see happen in the next 5 to 10 years.
Thank you. So last but not least, to Philip, maybe another question also. Do you think Indonesia has a chance also to shift from luxurious to ultra luxurious?
Morning. Always great to be the last on the panel where all the shifts have been highlighted. I think I'll counter in terms of a couple of them as well. I think sustainability, I think the score is 3-1 now. I think I agree. Sustainability has its reference. and its merits, especially in terms of certification. But there's two types, right? There's the green build, and there's the operational one, the GSTC. So I think GSTC has more importance in terms of how you want to kind of value asset your guest experience component and their actual understanding of what you're doing at property level. I think in terms of Steve's comment regarding the upscale to luxury, actually we see a different trend for us in Ascott. We're looking at it from, we see that mid-scale and I think we agree lifestyle are the two areas that we see potential growth, especially in secondary and tertiary cities in Indonesia. So I think that's been a kind of a shift because upscale and upper upscale has always been kind of a steady kind of performing asset across the last few years. So we see mid-scale as a way to come in and lifestyle to come through as well from that travel shift. On ultra luxury and luxury, to be very open and honest, Ascott is not too much in the luxury field. Definitely you do have locations that can drive ultra luxury, but from an international segment, you've got to look at potential what shifts can be coming. So for example, highlight the weaker rupiah, right, is going to be obviously have an effect on that aspect as well. You're looking at obviously the Moody's kind of outlook as well. You're looking at the frontier status that's being kind of talked about in the news as well. So from an international segment of investment, I think you could see some shifts that would happen in Indonesia. But as said before, domestically, Indonesia's got a really strong market. And I think mid-scale and lifestyle in terms of guest preference and the mid-market, their spending power is starting to rise. So we can see that segment's kind of growing from that standpoint.
Okay. Without undermining your last position, Philip, I will try to ask question number 2 to you now. Okay. Who do you think benefits most from these shifts? Is that owners, investors, operator, or customers?
I think all three benefit, but not equally, and in different standpoints. Right? I think overall customer benefits because there's going to be more product that's going to come through. There's going to be more options that come through. I think for owner and operator, basically it's going to be who's the quickest to be more adaptive and more flexible in order to be actually the one that will benefit from these changes. I think when you look at it from an investment standpoint, or also look at leveraging. So with capital outflow, those that have high leveraging and low leveraging, they will benefit or de-benefit from what the situation is there. Yeah.
Okay. So the same question to Ilyas. Philip mentioned about Moody's rating from stable to negative, and rupiah is weakening. Is it actually a good opportunity for foreign travelers to come to Indonesia because everything becomes very, very competitive and
let's
affordable?
Say cheaper.
Yeah.
Yeah, so in a way, yes and no, because it also shows that the economy is getting weaker. And you really need to study the opportunity depending on, of course, location, and the market itself. So to answer the question, it's really complicated to say who is benefiting from what, as you said. Like we believe that a deeper market means more competition, more constraints on costing, bringing higher added value in terms of experience. So the consumer will definitely benefit from it. Owners, we need to anticipate trends. When we build a hotel, it needs at least 1.5 years if you're super fast, up to 3 years, let's say, average, sometimes more. So you need to anticipate what will be the consumer behavior in 5 years. So you don't build a hotel that is already obsolete when you deliver it. So I would say that owners need to anticipate, have like people like Norbert, like having these feasibility studies that helps understand the market deeper. Now operators, how they will benefit from these shifts. This is absolutely personal. I don't believe in an asset-light model anymore. I think that they will need to put money in the game and get skin in the game at the deeper level. Even for them in the future, they will need also to prove there's a lot of brands in the market. Like we don't even know which brand to choose because they're all saying the same stories. I'm giving this from, I know there's a lot of operators here, so. But from an owner, from a developer's perspective, it's important also to state these elements. So operators, if they don't concentrate, if M&A is not happening in a more, let's say, aggressive way, they might have issues to remain in the game over the next 5-10 years. We would see, in my opinion, a lot of concentration. And again, I insist on the fact that need to have more tech integrated systems.
Thank you. So what do you think, Steve? With the Gen Z and millennials now are more into experience than and lifestyle than ultra luxurious. What do you think? Is there any shift also in terms of target market going into hotels?
I think if you look at the Indonesia demographics, I think the age group that is spending more time in hotels is getting younger, right? So that's one big fact that is driving that growth. And even relating to the owner profiles today, I think the owner profiles are shifting in that regard as well. The second generation is taking over the controlled business. A lot of first entrant owners we see in the market, all getting very young, actually. And a lot of the hotels where people are spending the highest average bill are usually the younger crowds. Well, with that said, if you talk about what has been said by this gentleman, I think a lot of things are happening in that regard. Gen Zs, like these owners' profiles, for example, they spend a lot on their hotel, but the whole game for building a hotel is different than 20 years ago, where building a hotel was easy. There was no competition. You talk about pricing. Cost of borrowing was lower. So now it's kind of owner profiles going through that selective phase now, where not everybody can build a hotel anymore. So we call it a rich man's game for a reason, right? And that, on the other hand, I see a lot of young millennials trying to do what their fathers did, but in a different way. So the brands that everybody is seeing around, I think there will be a more client is king these days. If you look at pricing, if you look at the diversified product offering in the market, I think it's very competitive for that reason. So the operator's getting squeezed for that reason. The owners is having its own challenges, cost of borrowing, cost of construction, things I just mentioned. And I think the customer has a lot of options to go now and to compare. So I think that serves it. But for an operator, we serve two clients. It's the guests and the owner. And we have to please both. And whatever the situation is, that's where we are hired to do. So.
Any thoughts on that question to Norbert?
No, I think it was answered quite well. I don't have to add to it.
Always the last one to answer. Okay, so I'll go to question number 3. What are the main drivers behind these changes? I think I go to Ilyas first.
Main drivers, first one will be education, but this is a long-term game. But I think it has been mentioned also before, infrastructure. When you have infrastructure, when government is investing in infrastructure, SEZ have been mentioned as well. I would say infrastructure, we have seen, I think that all of us here, we are aware of what's happening in Bali. There are pros and cons. There are, good stories and bad stories about what's happening in Bali. There's been a Bali bashing all over 2025. There's been a social media game about Bali is great, Bali is bad. Also, something interesting happened when Thailand and Cambodia had this situation. A lot of people flew to Bali at that time, surprisingly. So to go back to the question, yes, infrastructure, roads, drainage, electricity, these are basics, but sometimes there's complication to have something that can sustain a certain volume of people.
So Steve, since you are representing the young generation here, this panelist.
Didn't say that.
Say that I'm also young as well,
We're all young. Norbert also.
So my question is, how do you see the hybrid working really impact this kind of shift toward demand of hospitality?
Hybrid working?
Yeah, hybrid working means that people now are more into work-life balance after COVID. And do you think the demand also shift, or there are more demands now toward hospitality sector? Is getting more crowded probably, or
Yeah, I mean, I
with
think
2
you
hours
should
flight.
ask this question to this guy with the service apartment offering in Bali. I think a lot of people are working from their apartment, right? They don't go to the office. They don't check in the office every day. So I'm not sure how this really pushes hotel growth in that regard. I mean, and there is a lot of people who work at the beach these days, right? You just need a fast internet connection for yourself to get yourself started. So if you relate this to hotels, there are hotels that have functional space focused on that. And you see that a lot in areas like Canggu or Barawa, where there is a little very open, live, remote working kind of setting. We see it in our hotels too. People want some quietness for their online calls. But other than that, I don't see a huge impact from hybrid working.
Maybe if I may jump in here, is what you really see is, I would really say it has to do with hybrid work, but overall attitude towards professional and lifestyle have changed a lot. And we see business trips are becoming shorter and shorter and being more and more often combined with a leisure component. Yeah, young businessmen now or businesswomen travel shorter, stay an extra day for cultural experiences and combine business and leisure. And companies even support it to a certain extent. And that has completely changed because 10 years ago it was unthinkable. Now but everybody's doing it. Yeah.
Okay. What do you think, Philip?
I think to the first question, obviously, I think it's human behavior has changed a lot in the last 10 years. It has kind of moved in terms of how the travel demands have and shifted across the board. People want more experience, personalization. They also want to see sustainability components actually being put in. So you see that shifting there. In terms of the hybrid work-life balance, I mean, I know Bali and service apartments, but even service apartments in Bali don't get that demand because you've got all the villas everywhere in Bali, right? And that's where they're going to pretty much stay from that standpoint. I think what hotels can do, though, in terms of capturing that audience that don't want to go to work, but they want to work in their surroundings, is that we have a lot of public spaces in our properties. And I think we need to be multi-purpose in our public spaces, and it comes down to design. And of course, I hope there's a workshop in the opposite room on design about this, is that we tend to think that a bigger lobby or a grander lobby is going to be value, but actually what people are looking for is somewhere to work or somewhere to socialize in. So you want to create social hub spaces within your public areas. And that way you can start to generate revenue from a per square meter. So I think that's just hotels, service apartments, resorts adapting to that kind of change and kind of redesigning how we do our public spaces.
Also to ask this question, probably to Norbert, I mean, if you look at Bali now, in the past, I mean, in the 70s probably, Kuta and Legian are very, very popular. Then shifting to Seminyak, then to Canggu, and then say if someone would like to come to Indonesia today and spend 1 week in Bali, it's very, very difficult probably to travel around because of the traffic. Do you see any also change in terms of location preference because of the traffic probably? It's like if you go to Bali for 1 week, will you go to Kuta, Legian, Ubud, and then you may end up spending more time in roads probably than in the villa. So my question is, would there be any change or in terms of location preference because of the situation or after COVID or whatever?
If the question is now about Bali specific location
No, I mean it can be anywhere, but I'm just trying to give you an example to be more precise.
If I would answer this question, I believe that the preference will go more into what type of hotel and less what type of location. Let's go back to Bali, for example. We have mentioned the rise of wellness-oriented resorts. The Fusion Group was here before. My humble opinion, the best hotel operator and hotel concept in Vietnam. Those kind of hotels, alternative asset classes, extended stay, party hostels, even clamping sites. There's a company here called Cloud Collective who builds clamping sites. Those are the future. I go to Bali now to a hotel where I actually feel so happy and comfortable, I don't even want to leave the hotel. And I stay shorter. The times of zooming around Bali and going to Ubud and Seminyak are over. So it's more about the specific hotel product, alternative asset classes, alternative experiences, wellness, that will gain. Where it is, if it's now in Kuta or Legian or Sanur, is actually not that important. Yeah.
Okay, thank you. So I encourage the audience to throw any questions. While we are waiting for the question, I go to number 4. Okay, this question to Philip. Are there any emerging locations? This is again to continue with my question before. In Indonesia that are attractive for investors beside Bali, Labuan Bajo, and Jogja, as well as business cities such as Jakarta, Surabaya, and Bandung?
Okay, I think I'll also try and at the same time answer this question here on the mid-scale cities. That's there, I believe, right? So basically, I think from an investor standpoint, for an asset value growth, obviously the cities you've mentioned are obviously going to be still the main priorities that they look at too from an asset value. From recurring income as an investor, if you're looking at that from that real standpoint, I would say that we quite like Greater Jakarta. So you've got Serpong, BSD, you've got go into Bogor, Puncak. That area I think has also got optimization there from coming through.
What about PIK?
PIK, I mean, everybody talks about PIK as well, right? But PIK is a huge landscape that's got a lot of development to go into. I think, Elvan's here, right, or was here. He's got like 14 hotels going in there or something in the next 3 or 4 years. So we'll have to see in terms of how PIK is spread out accordingly and where you position yourself in that area. The other area that we quite like as well is Central Java. So I think to the question of the mid-scale and lifestyle properties, I think Central Java has a lot of potential there as well. Infrastructure is improving. Places like Semarang, Jogja, these are quite interesting locations that you are getting different type of segments coming through. Before was pretty much 1 or 2 different revenue segments. Now you're seeing about 6 or 7 going across. So I think these are the markets that we would look into.
Okay, Ilyas?
About Bali, just to complete as well what Norbert you say, 100% agree. We saw a trend going westwards. We collaborate with a company called Kedemu Fund, and we know that now Bali will be now different micro locations because of the traffic, except if you can have a helicopter to go from a place to other. And it's not a joke, people are doing it now. They're already thinking about having the helipad on the villa, which will create other issues about transportation, etc. But it is happening. If we talk broadly about Indonesia, we still believe in the 5 SPDs, super priority destinations, although there's a little bit of lack of investment to develop these areas faster, because speed of action is one of the most important elements in investment as well. I'm a big advocate of Lombok. I know there's a lot of people here that have a love and hate story with Lombok. For me, it's only love. So basically, Lombok, I believe it's a market that is not only, we always say it's coming, it's coming, it's coming. Yes, it is. It's not coming as fast as we want because there's not yet big hotels having big developments in Lombok. Although there is one hotel in Lombok, actually in Mandalika. It's $120 million that have been signed last year, Japanese investor. So there's things happening step by step. And we believe that it's the mid-scale investor that is shaping the market in Lombok, for instance. West Sumbawa, also a little bit of interest. Sumba, I think that there's already pretty big players there, like Nihi. They are opening as well in Rote. So going east will be Flores. Likupang is a bit complicated in my opinion. And the last one will be potentially Lake Toba. So these are the 5 SPDs in a way.
Any thoughts, Norbert?
Yeah, that is an interesting, because the very last area where I would invest my money would be Lake Toba and Lombok. That's for sure. For very good reasons. We can discuss about it later. I agree with the gentleman at the end of the road says the hotels in the central Bogor area have outperformed everything in Indonesia since in the last 10 years. I know that for sure because I've built my own hotel in Bogor, laughing all the way to the bank. And there is a real need for quality resort experiences with human-sized MICE facilities in driving distance of greater metropolitan areas like Jakarta and Surabaya. The second fastest and largest growing metropolitan area in Indonesia actually is Surabaya in East Java with Mojokerto and Purwokerto and Semen and all of that, Gresik. So those two areas, driving distance from town, 1 hour to 90 minutes maximum, those hotels will outperform any other hotel in Indonesia. Yeah.
Okay. What do you think, Steve?
I think in addition to what these gentlemen have said, I think there's still plenty of opportunities even in Java, not to mention just, the leisure destinations. Greater Jakarta, for example, now, if you look at PIK 2, go all the way to BSD, Gading Serpong, we're opening a hotel hopefully by the end of this year in Cikupa. So, Greater Jakarta, where a lot of industrial estates have presence, and they don't usually, like if they invite corporate clients, the closest place they can send them to is probably Gading Serpong or BSD. But if you're further, like in the west, then it's quite hard to find a decent hotel. So that's I think an interesting area where even in Bekasi, a lot of new hotels will come up. And then of course Bali. Bali is a booming market, I think, for all operators. We all signed projects there. We have our owners of our Radisson collection in Ubud here with us today. So that's hoping to open next year. Canggu, we have a project which is also very promising. Lombok, I'm a big fan of Lombok too, as a customer, as a consumer. I hope to see the investment catch up there. Doing something similar what Labuan Bajo has done in the past with having a good airport, good facilities. The infrastructure is there. It's now just about the execution, I think, that Lombok needs. And people that, like Ilyas, that drive that region and attract investors, I think that's really what the missing puzzle was from Lombok, and connect with the Jakarta crowd. So yeah.
Okay, thank you. I didn't hear people mention about Bintan though, because it's close to Singapore, probably also a target market in the future because of rupiah depreciation, probably. Yeah.
We see a lot of demand growth in Batam actually, more than in Bintan. Batam is booming, has been booming for years. There's a lot of really interesting projects in Batam. That would be an area I would have a closer look at. Maybe if I may add one more thing, I would encourage investors not only to look at locations, but look at asset classes. I still believe, and I have been an advocate of the budget hotel asset class as a fast return of investment is fantastic. When you look at branded, well-managed budget hotels in Indonesia, we have a few hundred, where we have thousands in the US. That market is huge. Yeah? And I can guarantee you that you can get 55, 60% GOPs in a well-run budget hotel. And there's no way you cannot make money with it. I mean, you must be really dumb if you cannot make money in a budget hotel. In Indonesia, where you have a middle class, proliferation of budget airlines and all of that. So budget asset classes, that's where the money is.
Okay, thank you. So I think we have 4 questions here, or 3 probably, yeah. Why do hotel operators keep adding up portfolios knowing that average occupancy rate is only like 60 to 65% per annum? Would that be attractive to investors? What do you think, Philip?
Obviously, trying to think where they're looking at from a city perspective. Obviously, it's not just about the occupancy rate, it's also about in terms of the rate that you're collecting as well, the size of the property location. So there's a few aspects that go in there. I think fundamentally, signing for the sake of signing is probably not the right approach if that's where that is leaning to. I heard a great analogy a couple of days ago where they talked about, Indonesia's got the pizza, and everybody takes a slice, but how much can you slice that pizza in, especially in a city when you're developing, right? So I think that's something to consider. But if you look at the occupancy rate, you look at a strong ADR component, then there is a possible aspect from that return.
Okay. What do you think, Norbert?
I just want to jump in there because I think it's a very good question. If I understand it correctly, the person is asking why are they adding more and more hotels to their portfolio? Well, the reason is they're all following an asset-light strategy, so they have no skin in the game, right? So as an operator, I get my fees based on revenue and maybe a little bit of QP, so I don't really care. I want as many flags as possible. Most larger operators are stock market traded, so showing it's a KPI to grow and grow and grow and grow, right? I know for sure I will not mention the name that the KPIs for business development people, for the big operators are set on, we know we're gonna lose 2,000 rooms every year on average, so you have to add at least 10,000, gives a net growth of 8,000, no matter what, in order to maintain share market value, right? And no operator will tell you, if you're an owner, I want to build this and this hotel, they will not tell you, it's a bad idea. Oh, go ahead, great. Really, that's the truth, right? And then again, it sounds, I don't want to sound like self-promoting here, but that's why people like Nova and Optimum come in, because we are neutral, non-biased, right? And we are not here to drive growth of a particular brand, which makes it much easier to give the correct advice.
Okay, what do you think, Ilyas? What are actually investors looking at or looking for in the current trend or current market? We've seen also a lot of China investors now coming. Yeah, they also bought Radisson, for sure, and also budget hotels.
The Chinese government did.
So what do you think? What are they looking for actually?
It's a hard question because there's different profiles of investors, and I cannot give one global or universal question on that. But if I talk about the people that we represent or we are working with, they are looking, and we touch base on this, to develop hybrid models. So one of the partners we are working with is looking at creating a fraction investment system. So where investors are buying tickets of 200, 300, 400, 500K, small investment, mid-size, small investment. And the model is built towards targeting biohacking and this hybrid lifestyle, like digital nomads, etc. So they're looking to enter asset classes that are slightly more exotic or slightly anticipating a bit more the future market needs that are already starting to be incepted today. And on the other side, what will an investor need? And I think also Nova Asset Management and the other panel members touched base on it earlier, is like a proper structured legal landscape without laws changing every year like everyone is stressing Q4 each year, like what's gonna happen? How am I gonna be eaten? What do I need to comply with? So that's number one. And number two, in the hospitality industry and investment markets will be a structured tax system, to incentivize people to invest in Indonesia. I believe in the areas where we have SEZs, these SEZs should be maybe enlarged, so we give to the people the power to work with the government. Usually these areas are government-led with ITDC or different government authorities, but also to work with private investors that can benefit as well from the tax incentives.
Okay, thank you. So, Steve, do you want to add on? I mean, for that question, investors, no need. Okay.
Okay, I can.
Yeah.
Please ask me. I'm here to answer, Pak.
Yeah. What are investors looking at actually in the current market?
Foreign investors or local investors?
Foreign investors, local investors.
I mean, there's not much foreign ownership activity in Indonesia at present. I think 90%, if not more, is owned by all Indonesians. And then if you even break it down between institutional and family offices, I think the vast majority is still family offices. And it's interesting because I'm also handling Malaysia now, and where the owner profile is very different. It's more institutionalized, more proper developers. And here, for such a big country, actually, there is not a big number of developers active. If you compare it, let's say, with a much smaller country like Malaysia. So that's one. I think we see in Bali, for most, and Lombok perhaps, a lot of Russian money coming in. So I think Russia was the fastest growing foreign direct investor in Bali since COVID, actually. So you see a lot of villas, a lot of residential products from their side, trying to sell and lease back perhaps. But In terms of hotel investments, most of the hotels are still locally owned, whether you talk about Labuan Bajo, Bali, or Jakarta, and it's mostly family offices. And this, touching to the point that I mentioned earlier, a lot of the second generation or third generation now taking over the business, and they're trying to mitigate their way to achieve the same as their fathers and grandpas did. So the owner profile in Indonesia hasn't changed much in that regard.
I think time is up now. So do we have time to conclude or finish? I think there are so many interesting questions and answers. I mean, I still have tons of questions, but we see you next time probably. Thank you for all panelists. Let's give a round of applause for all of them.